Pooja will take care of. You can't hear. I think, Hirdesh, I would suggest you to check your. Okay, I think most of the people can hear us. It could be issue on your end, maybe your speaker. Uh, Pooja, can you message Hitesh that? Uh, Hitesh, if you can message that something. Yeah. All right, guys. Let's talk about interest rate. This is the hot topic this moment. A high interest rate. What we're gonna do basically? This interest rate is not good for uh, people, investors, who those people they want to buy a home, but it is good if you want to put money in bank basically. So putting money in bank was dead business, but now it's coming up. So somewhere you lose, somewhere you gain. But let's see what is pros and cons. I believe, even if you are in middle of sea, you just on a small boat, there is opportunity to fishing around. And I feel the same way. The interest rate is high. There is somewhere opportunity for us, everyone basically. uh, this is the time I have seen 2008 and 9, and that was the experience I gathered. James was kind enough to help me that time. When I bought my first property that time, so I literally redundant lots of advice. I listened to James what he's saying because James used to come on BBC and Sky News in morning show. So this is what I feel repeating again what I have seen in 2008 and 9. So now, what we see, where the interest rate is going, we are on 5% this moment. UK interest rate needs to stay higher for longer to beat inflation, and it feels like it will go up 6% by end of this year. I'm pretty much sure you guys won't be surprised because I feel this is the case. It will potentially go to 6%. I'm expecting a hike next month, which is the news yesterday. Bank of England base rate may go 6.5, uh, 5.25, maybe next month, or maybe 5.5. We don't know, but it will go up. Now, what are the options basically? Now, let's talk about the market. Even though interest rate is going up and up, what is happening with the market? I'm not surprised at all. Market was very good. When we had COVID in 2020, that was market set to zero basically. Then it's literally jumped more than almost 14%. And then now it is in minus, right? It is in minus. So the simple logic is high interest rate, market is going down, so property price is going down, which makes sense. Okay, guys, something is not right with the market. Property price going down, interest rate going up. What we can do? Again, market continue. Let's talk about last 20 years of market. I don't know if you can see this blip basically. This is what we had 2008 and 9. The market was pretty much here. All of a sudden, it's dropped. Then we had COVID here, right? Then we were here. Now market is here. It is going up, but it will eventually will go down as soon as interest rate goes 4.5 or 6%. It would go down. This is very interesting paragraph. If you see here, quarter one, which is this one, this is mapped with according to areas. So if you see London, if you see nationwide, if you see East Anglia, this is pretty much going down versus quarter 3 and quarter 4. So in last 1 year almost, market has massively changed. And the logic is high interest rate. It will go a bit more down. How much you think it will go down basically? At this moment, honestly speaking, uh, this is almost 5% down. 5% according to Jupla. Yesterday news. Homeowner Alliance saying it can drop 5 to 10%. Not surprise. Which we all know they're predicting 5% this year. So whatever has done already, 4%, and another 5% on top of that. So 10%. This is the market prediction. So you're talking about almost 10 to 15% market would go down if interest rate continue to grow. And this is where we feel, there is an opportunity. Let's drive what is happening in the market. Okay, that was the data, right? Let's see what is happening here. The best tool is Joopla. There is a right move on the market, but I'm going with Joopla just because there is a option which say most reduced price, right? It gives you most reduced price. It tells you, okay, guys, what is happening in which area. September 9, 2022. I was hunting properties that time. I'm always hunting into real estate business. So I thought, you know what, there is a new property in market. Let's go and see that Property there's a potential to develop, make it into either HMO or split into two flats or something like that. So I went to see this property for 575 Carshalton, which is in Carshalton in Sutton basically. 3 bed, two reception, one bath. Property required at least good 50K investment. Around this area, property price is 650, 700K. So I wasn't surprised that property is coming for 575K. Fair enough. I went there. I like the property. I put my offer 550. I said, look, I have to invest another 50 grand to make it, to change the layout and either split into two or convert into HMO. So I need, my offer was 535 actually, not 550, 535. Estate agent told me, sorry, that's way too low. We can't, we won't be accepting that offer. Perfectly fine. Thank you very much. July 18, property back, 500,000. Agent was calling me 3 times. VJ 525 is the last price. VJ 520 is the last price. I said, sorry, dude, I already invested somewhere else. This is 18th July, the last week, basically. 10 is back. 500,000 from 575 to 500K. Now, this is what we say market. If people say, oh, I don't see market is going down, no, you won't see with every single property. There is some certain property, there is no room for compromise, but there is some property, a massive room for compromise. And I can tell you at least wherever around this area, certain area, 20 odd property where they have massively gone down. 13% drop. And this is what we are talking about. And this is why I was, so, okay, guys, look, if I would be honestly speaking, I would be an idiot if I paid for 535 or 550 for this property. Why? Knowing the fact that property market is going down, interest rate will go up, very clearly visible, right? You don't need to have basically a massive mathematician or economist to know interest rate is going up, then obviously property price will go down. It is just you need patience. Those people do fishing, they know, they have very good patience. So the same thing here. I didn't had patience. I bought the property basically somewhere else, but now I see, okay, 500,000. Do you think it will go more down? Maybe, if cash is the king here. If I go and say, guys, look, I'm paying 475K, but I'm buying in cash within 28 days, deal done and dusted, maybe, but 500K is not bad either. 13% drop, not bad. How many of you know what happened in 2008 and 9? If you don't know, let me give you few bullet points. House price fell by 16% in 2008. The property I bought was in market for 225, and I bought it for 150K, 157K, basically. That tells the story, okay, that is the right time to invest. Interest rate were around 6%. Interest rate went down from 6% to 2%. How many of you think, I believe the same thing going to happen? I'm pretty much sure it is the same for 2023, 24. It will go up. Then there is a limit. Uh, Government will see, okay, there is more people struggling to pay their mortgage, struggling for their bills. They have to do something. Yep. James mentioned I bought this time and saved 20% in 1 to 2 years window. Perfect. That was the time, and I feel this is the same time we are having now. It could be, I might be wrong here. Maybe next year, maybe worse than this actually, right? Or maybe 2025, but we don't know. The election is next year. The election was around same time, election time around that time. So the same cycle is repeating. So I feel this is the best time to buy a property. Not a big portfolio, not a big massive, buy small properties like 100K, 150K, where you're not spending a fortune basically. You 200K property, if you're getting 150K, that's not bad at all. Now, what is the typical state interest rate nowadays for buy to let? I took this figure from Barclays, right? I know interest rate is going up to 9-10%, but I'm just keeping, okay, I have 30% amount. I'm just keeping this 6.30 purchase only. Let's say this property, if I was the one who wanted to buy this property for 575 when market was good, guess what? This property was technically sold STC to someone for 555. The guy changed his mind. He saw the market is going down. He pulled. Then second guy, he pulled. Now that's why property came to 550 basically. If I was buying this property for 575, I will be paying around 33K roughly stamp duty. If I had 6.3% interest rate, 25 70% LTV, I will be paying £2,667 basically. That's okay. That's not bad. If this property is 500,000 for the same interest rate, I'm paying almost 300 quid, more than 300 quid less amount, right? This is it's considerably, 3,600 per annum you saving, and number of years you calculating. If I was paying 8.3%, in worst case scenario, let's say if you bought this property for 500,000, but you're paying 8.3%, you're paying 2,700, 2,800. And this is my question, this is all about today. Would you buy a property for 575 when market is good, right? Or would you rather wait uh, and we'll see the best deal actually? Again, two option, market is good, everyone is going for, after properties, you are not getting properties, you overpricing property, 575K, maybe go 580, then in that situation, you paying for this property 580, 590, because lots of buyers. Interest rate is 4%, 3%, whatever, it is normal, right? Or when interest rate is high, property price is low, let's do a calculation. And this is the whole point, to give you a little information. how far you can go, or how down you can go to get a property on low price versus high interest rate. Same property, 575K property. I'm assuming high interest rate will remain high for good 2 years, right? It can be 3 years, it can be 5 years, or it can be 1 year actually, because election is around the corner next year. We don't know what's going to happen. For sure, I know mid of next year, most probably rate will go down. I'm expecting, this is my personal opinion. I'm not the expert. It is my personal opinion. I think government wants to keep interest rate probably between 4 to 5%. So that is a set benchmark. Okay, guys, we as England had around 6% interest rate in terms of last 100 year. Last 20 year, it is around is different basically, 3%, 2% basically, because of whatever happened in 2008. Now, let's say if I'm buying this property, not 575K, I'm buying for half a million, 75,000 less, and I'm paying 70% LTV, my mortgage will be £2,390. Let's calculate price versus interest. Either buying a property on higher price, low interest rate, a better deal, or a property with low price and high interest rate. Calculation: 75,000 you saving on one property if you're buying. Let's say if interest rate is 7%, right? If interest rate is 7%, then you are paying 154 quid extra per month for, let's say, assumption 2 years, right? You paying 3,696 pound, just minus basically uh, minus 3696, whatever the amount comes, 70,000, let's say. I think you are better off 70,000. If it is interest, if it's high interest rate remain for 3 year, 4 year, you still better, basically you still in better uh, deal. Let's say if interest rate is going 8%, go for worst, right? If interest rate is going for 8%, you paying almost 10 grand. Again, let's say 9168, you're still saving 65K here, right? Again, it is 15 grand here, you are almost 60K. Things goes bad to worse in terms of interest rate, goes 11%, 12%. You is better basically, in sense, uh, you are saving more money when property is on low price basically. I can show you number of properties. Let me show you quickly Jupla. This is what I want to show. uh, okay, that's why I love Jupla, because it gives me what is happening in the market. 22% down, right? In normal circumstances, unless somebody is putting a property price very hypothetically, high, that is a different issue. Otherwise, 22% down, one bad property. I still feel, right. If I will be buying this two-bedroom property, I won't be forking out more than 180K for this area. I know for two-bedroom property, easily 1,600 to 1,800 rent, right? 260 way too high, but still, right? 16% for a five-bedroom, five-bathroom, half a million. This is a HMO, ideal deal basically. We know Folkestone, the price tend to be a bit high, but 16% is a good amount. Probably this is my time. As a investor, I would be speaking, hey guys, the properties in market, almost 3 months now, you have already reduced 17%. Fancy closing the deal for 450 something. This is your opportunity now. 265, 2 bedroom again, right? You can see number of deals here. So what in my opinion, buying a property cheap, rather, I would be happy to buy a property on cheaper price, low price, and happy to pay a high interest rate rather than going into war like 2021, 2022, when interest rate went literally 0.1%. There was no property market actually. Every single property, I was planning to buy a number of properties. I was putting offer. Even state agent was not giving me time to view the properties. So this is the time. Now, how to fund that property? Right, okay, that's fine, good. I want to buy. From where I will get the fund? That is the question mark. I have 50K or 80K or 100K in my account, and I want to buy this property 200K. From where the fund will come? Gaurav, over to you. If you could share your screen, please.
Thanks, Vijay. Hi all. This is Gaurav Ladha from Landmark, and I've got my colleague Michael here.
Oh yeah.
And we'll just go through the actual current state of play around the property market, buy-to-let market, and how to fund deals. We're not going to give you a kind of prediction of interest rates because that's not something we're going to do here. But we'll go through. We'll share our screen firstly, and then we'll go through our presentation if that's okay. Sorry, just 2 seconds. Sorry, apologies. Okay, that should. Sorry, guys. Can you see this Landmark page?
Yes, Gaurav, we can see.
Can you see the screen?
Yes, we can see. Yeah.
Oh, brilliant. Okay. So I'll pass it over to Michael. We'll just go through what we do at Landmark, and then we'll just go through the presentation if that's okay.
So hi everyone. I'm a mortgage and protection broker at Landmark. Just to give you an overview of obviously what we do at Landmark, established for around 5 years, previous company under a different name, and I'd say we cater for all type of clients. So whether that's a first-time buyer, whether that be someone looking to invest into property, into the buy-to-let market, remortgage, I suppose is a key focus at the moment for our clients. You can imagine, as Vijay mentioned, previous rates 1 or 2%, rolling off to those rates where we're now at 6 or even maybe higher depending on the loan to values. So I think it's what we're finding is there's a lot more concern. Obviously the media do a lot to share what's out there, whether that's always shared in the right way. Sometimes what we read in the media is not always an accurate reflection, but it gives people an idea of what's going on. Also, other areas that we're helping clients with, whether that's self-employed mortgages, which can be consultants, sole traders, people that own their own companies. We can obviously accommodate for that as well. In terms of high net worth, so we work with a lot of private lenders and private banks as well. So we've got 2 companies. We've got Landmark Private Finance and Landmark Specialist Finance. The specialist area sort of looking after bridging and auction finance. And obviously, for transactions that need to act at pace, we have a company to support those clients as well. I think as we've probably covered off, what I'm finding, where there's that instability in the market, there's always opportunity, which I think has been highlighted well with the previous conversation. We're seeing property prices, where a client needs to dispose of that property, they are accepting offers under market value. And I suppose that's where, even if the cost of funds is increasing, if you can, save that on the purchase price, then it can be a good investment to make. We have seen some stability in the rates over the last week or two. So even though with the predicted base rate increase, as you mentioned, maybe another 0.25%, and then we'll see future rises potentially. The swap rate market, which is where lenders, the wholesale lending market, we've seen those start to stabilize and sort of come down slightly. So we have actually seen this week for the first time in a few months lenders reducing some fixed rate borrowing. New lenders introducing 3-year rates, and that's where clients maybe don't want to fix in for the 5-year because they feel rates may come down, but just want a little bit longer than a 2-year stability. So we've seen lenders starting to adapt to what clients ultimately are asking for, because it's a challenging market, and as a broker, it's been extremely challenging because we've seen rates consistently changing week by week. So the conversation we have, literally yesterday can be a completely different one the day later. Where do we see interest rates going? As Gaurav mentioned, we can't predict. There's too many variables there. I suppose a heavy influence is inflation, and what we've seen recently is that inflation level starting to come down. So we have seen, the market change its prediction of rates maybe continuously increasing, because now we're seeing inflation reduce slightly. In terms of the cost of lending, the average sort of rates, depending on, say, a 25% deposit, you're looking at around the 6% mark. And we have seen a lot of lenders now changing their interest-only requirements. So when I say requirements, but being a bit more flexible, so maybe going up to 60 to 70% interest only, which again, is not advice. It's not suitable for everyone. Obviously, you have to have a suitable repayment vehicle in place, but it shows that the market is changing to the environment, and I suppose that's what at Landmark we're able to do is help clients navigate that marketplace, and obviously advise where possible. We've got some changes coming into play with the markets. I think Gaurav's going to go through some of the changes that we've seen, especially in the buy-to-let market. There's a lot of changes to some of the regulations potentially. There's new bills that are being passed. So I'll pass over to Gaurav to give a little bit of an overview of the buy-to-let market and the current state of play.
Yeah, no, thank you, Michael. So what I'll do is I'll just kind of cover off the actual current state of the market when it comes to sort of from a perspective of the landlord. So what we're seeing, the challenges we face, I'm a portfolio landlord myself, so I'm going through some of these issues myself. So we are seeing higher fees being charged by lenders, because that's where the market is at the moment. Average fee is 3 to 5%. Stamp duty, there's a surcharge, as we know, that came in sort of 3-4 years ago. Section 24, where landlords can't offset the interest cost, any buy-to-lets kind of owned in their personal name as an expense. EPC changes which are coming up for the private rented sector, where by 2025, all new tenancies or new ASTs that are going in place have to be C and above rated. So that's probably an expense coming, kind of down the road for landlords. Section 21 changes being proposed. Portfolio landlords, stress testing, background portfolios. So it's getting a little bit tighter. So it's not all doom and gloom, but there are ways landlords are adapting and evolving. So what landlords are doing, and sort of buy-to-let investors are doing, they are looking at other avenues where they can still kind of achieve a yield. They are looking more into HMOs. That's what we're seeing on the ground at the moment. We haven't seen many purchases on the buy-to-let direct side. We are seeing more people creatively looking at HMOs, or even commercial HMOs, which are kind of normally over 8 sort of units and above. And this is where you can achieve a commercial valuation and even borrow more than the bricks and mortar valuation. We've just done one literally this week where there's 14-bedroom HMO in Plymouth for a client, purchased, as an example, purchased for 240, 250, around that mark. Spent about 80,000 on it. Now we're refinancing off of the bridge to a commercial valuation with Paragon as a lender. We're valuing the property on a commercial basis, commercial valuation at 490. So it just shows there are still ways people are looking at sort of making property work. Auction purchases at the moment are very, very popular. So a lot of our existing landlords are venturing more into auction purchases. Yes, there's fees involved, and there may be bridging costs and things, bridging fees and higher legal fees. But if you can buy the property at the right price, then it does kind of make sense of doing that. A lot of landlords are looking at properties where they can add value, where it needs work. It may not be habitable, may have an issue with, the actual condition of the property. We've had a client who's purchased something which had a structural issue, but wasn't noted, bought the property really, really cheap, got the works done, and then refinanced out in 6 months to a normal buy-to-let mortgage. And now we'll just go through different options of funding a property purchase. So I'll kind of start with a traditional route. Majority of the people will go down, sort of 90% of the clientele will go down. If it's a buy-to-let, they'll go for a buy-to-let mortgage. Or a residential, they go for a straightforward mortgage. That's if the property is habitable. It's a kind of a normal purchase. Great, that's what they can do. Obviously, they can buy it cash as well. That's if you're in a position to buy as cash. Great, The other options are kind of looking at a bridging facility, a bridging loan, which is normally for a short term. You're looking at a deposit of about 25 to 30%. A rate starting, they've actually come down this week. The rate starting from about 0.69 per month. Lender fees are about 2%. You'd normally go down this route if you are getting a discount on a property or if there's gain to be made. Otherwise, you wouldn't buy at market value, on a bridging loan. Just wouldn't. I can't see that making sense. And then you do have things like a refurb mortgage where you could go on something called a bridge to let. So you go on a bridge with a lender, do the works. Once the works are done with the same lender, they let you go into a buy to let. The rate's already approved. It's the same underwriter, same surveyor who will go back and see the works being done. So you don't have to pay fees again, sort of thing. So it's a little bit cheaper that way. The only downside to that is really once you do that, you are kind of stuck with that lender, whatever the rate they offer you, that's where you are. When you're looking at you could look at remortgaging existing sort of property portfolios to raise cash. There are options of second charge mortgages, second charge bridging. So there are quite a few different options we could, we could look to do, kind of arrange funding for our clients. And then I'll just go through specialist funding. So we spoke about bridging funding. We spoke about sort of second charge lending. And second charge lending generally is behind you. Let's say you've got a mortgage with the Halifax, for argument's sake, but that you need to raise another 100k to buy a property. You've got a deal available to you. We could arrange either a term second charge facility, which could be in line with the mortgage, 10 years, 15 years. So that's kind of a bit more of a longer term facility. Or we could do that as a second charge bridge. Then you do have things like development facilities where, let's say you buy a house and you want to convert it into a 6-bed HMO. We could look at a development on that side. It could be ground up as well. There's refurbishment finance. So there's quite a few different ways of doing this, but we can kind of go through. Happy to take questions later on and go through the options with you. Then it just tells you, you can have these in your personal name, limited company, LLP. So there's different structures we can look at as well. And then this is just our details, what where we're based, and if anyone wants to contact us, happy to go through any sort of questions offline as well if required. Rich, over to you.
Perfect. Thanks, Gaurav. Very helpful. Guys, Q&A. Please feel free to ask any question you have. You can type, you can write. Okay, Kiran, Joomla is open for everyone. Anyone can use Joomla basically. That's perfectly fine.
Yeah, sorry for posting that question.
No problem. It's all right.
I was stupid. I couldn't.
It's okay. It's happened sometime. It's browser cookies play a massive role actually sometime.
Yeah.
Questions, guys. Anybody? How many of you think actually the market is going? Interest rate will go up going forward by end of the year.
I definitely believe that it will gonna go up coming August, at least by about 0.5%. I believe that's what is gonna happen to bring the inflation down. That's one. While I'm speaking, sorry, I just didn't realize that I should be putting my hands up, so sorry about that. Just a quick one to Gaurav. Um, typically, with buy-to-let on companies, the product fees has been soaring. It wasn't what it used to be. So what should be the general figure that we should be looking at, percentages that we should be looking at for companies, please?
That's a really good question, Mukesh. I mean, the thing is, I mean, I believe fees are going to come down. I think they have to, because there's not enough lending going on. It's different at the moment. We speak to lenders every day. I mean, what we're hearing is they've got the funding, they've got the liquidity, but they just can't lend the funds out at the moment. And it's just the state of play. So I think the average probably at the moment is 3 to 5%. That's what's available, but it really depends on your personal circumstances, loan size, and then that's what we're happy to kind of run through scenarios with you. So if you have a rough number that you're looking at, we can take this offline. I can kind of give you some ideas, but it's really difficult to kind of say whether to pay 1%, because what's going on at the moment is if you pay 3%, for argument's sake, your rate's going to be out 7%. If you pay 5%, you may get 6% as a rate, as a fixed rate. So as a broker, what we do is we'll basically work out the numbers on the loan side you're applying for, see which one works out better. So it's not always about going for the lowest rate. I'm sure you know this anyway, but it's about kind of working out the overall cost over 2 years, 5 years, or 3 years. So that's what I would say to do. Maybe if you have a broker, maybe speak to them, and they can kind of guide you through the particular example that you're looking at, and they can kind of tell you which basically the product to go for, which is the most suitable.
Thank you very much.
Yeah.
Pradesh, I think you have raised your hand.
Yeah, hi Vijay. Yeah, so my question is, this next year there is going to be elections. So interest rate is still going to be high, or government will try to bring it down? I understand that the current is going high because they want to bring down the inflation. So how it's going to play during the election? It is for the buyer like me should wait for the election to look at the property after that, or is it the right time?
Look, this is the right time, right? If you are getting a property now, there is few stats basically, which I should have added, but I did not. The number of properties market way too less than what we had last year. So at least 35% properties. We had more properties last year versus now. The second thing is, not all the people selling their property. Although if they're selling on cheap, they're buying on cheap, but their human tendency, right? Okay, I don't want to sell because it's not the best time to sell. I want to sell, but I'm not selling because of the market is not good, right? So you are getting less property. Those property coming in market, you think there's a desperation. Either number one, their house moving. Number two, their family issues, divorce or probate or something like that, or properties in a rundown condition basically. So in my opinion, if I have to invest, I would invest now. Tomorrow, we don't know if interest rate goes down. Maybe if interest rate goes up, then again it's opportunity. But securing a right property is the best time is now.
Thank you, Vijay. Thank you.
Vijay, is this session only for buy-to-lets, or is this general
Go
discussion?
for your question.
No, I'm just thinking, is this the right time for homeowner as well, or is this the market for buy-to-lets only?
Look, I just bought a home.
Yeah.
So for myself, basically, for living, basically. So this is pretty much market is whether you want to buy, you want to move, or you want to invest. This is the market, right? The property price. Let me give you some information. What happened after 2009? In 3 years' time, 2012, my next door neighbor I bought a property for 155K. My next door neighbor sold the property for 296K within 3 years' time. Look, the difference 150 versus 300, almost double. My two door neighbor, then they sold a property in 2014, right, for 340, almost 200K above. This is what is going to, when you will be doing your remortgage. Let's say I'm giving you a very typical example here. I'm just sharing my screen. My screen is already shared. Let me go to my favorite tool. This is what I love. Uh, this is a property, right? Sorry, ignore my drawings. Let's say this property price is 70,000, right? You need tiny bit modification. You buying this property for 70K, you adding another 10K, right, for making it up. Property is costing you, let's say with tax, everything left, right, and center, 90K, right? The rent for this property, let's say this property rent is you getting 10%, 700 pound, right? How much is total rent per annum? Basically, 8,400.
Yeah.
Now just presume that you bought this property in cash. You invested 90K. Now the annual rent was 700K. Sorry, monthly rent was 700K. You got rental appreciation. When you modified this, you got property into, you got a better rent, let's say 750 something, but you're going to bank again and you're telling bank rental valuation, correct me if I'm wrong, they normally check 5% is a good rental valuation. You're getting almost 10% valuation. We have number of property where you're getting easily 9, 10, 12, 15% LTV yield basically. Now you're telling bank, guys, this property I believe is for 180K. Bank will say, no, it's not 180K. We think it's 150K. Right? Okay, thank you very much. Lend me 80K. How much you bought this property? 80K. You invested 80K. Basically, right? You have your 70K back straight away. You putting that money somewhere else, right? But this is the best time. That's what I'm saying. In typical scenario, the price 70K is today because of the current market. Otherwise, this property won't be less than 100K or something like that. We have Puja good number of properties like this nationwide. Up north, loads basically, not around London. Within M25, you won't get this kind of property. But yes, outside London, you would get easily this kind of property. Yes, Mr. Rao.
So, Vijay, on the same topic, how much time you need to wait to go
3
to
months.
lender?
3 months. You got 3 months rental.
Solution.
Yeah, 3 months rental. Basically statement. You tell, look, I have one yearly ST. This is my 3 month rent statement.
Okay.
Right.
To the same lender or different lender?
Well, whoever giving you the highest value basically. So you have done the job. They don't know how much you invested here.
Okay.
Right. Their concern is they're lending you money. They want their money back with interest. Okay, thank you very much. What is the rent? 5% yield is good yield. This is what they say healthy yield, right? And this is what you playing on. You looking for the deals where you can have at least minimum 10% yield. As it goes up, it is good for you. Yes, Mr. Rao. Sorry.
So, sorry, follow-up question. It will be the same interest rate or it will be different product?
Regardless the interest rate here, right? You building your portfolio. This is the best time to build your portfolio. It will take you 3 months literally to have 3 rental statement, but the same time you getting 70K back whatever you invested in property, and you utilizing the same capital again somewhere else, buying a 50K 60K property. And you know what, buying a small property on different location. It is leveraging your portfolio basically. Maybe Liverpool is not going very good, but Manchester is doing good. Maybe Edinburgh is not doing very good, Glasgow is doing good. And this is how you leverage. Okay, somewhere I'm gaining more. It is just like a share portfolio basically. Some share is going whoop, some share is growing slowly, and some share is not massively. But end of the day, for you, if you have mortgage here, you're getting 700 pound rent, you're giving bank 350, you still have 350 here, right? You're making money, you're not losing anything. And the same thing, you following the same cycle. And that's how lots of people made money. They built the portfolio basically. Yes, Mr. Rao.
Sorry, I was just going to say, somebody who asked about buying a, is it good time to become a house owner? Yes, because your rental is not going to go down. The moment the interest rate goes up, the owner will gonna pass it on to you. So you will always benefit, even if you are having a higher interest rate, to go and become a homeowner. So you'll still save, number one. Number two, it has been in the history. Currently, you look at, we have been looking for last 15 years, 0.1%, whatever it is. If you look at 2003, 2004, the interest rates was 6%, 7%. If you look at 1990s or something, it was relatively higher than that. 80s was 14% or something like that. So whenever the interest rate falls, the property prices go up because the affordability changes. Therefore, people will go for it. So your property prices go up. So this is a common, that's why I say whether you're a homeowner, investor, whatever it is, it doesn't matter. Your money is safe. Thank you.
Thank you,
Perfect.
Mr. Thank you.
This is the property was in market back last year, no, this year. I asked estate agent, I want to view this property. He said, no, don't waste my time. I already have 20 plus people buying this property. I have 6 offer. The 625, the property was, look, is back in market again. What? They were bluffing. The market, this is 625 to 565, right? And this is what is happening in the market. You can, I think, go on Joomla. You can go and search the history of a property because estate agents are quite, I would say, intelligent in that sense. They remove the old listing and put the new one. This property again back in market. This is the, I have, if if I would have seen this property, definitely not 625 but 600k I would be putting in my offer, because I know around this area there is a minor tweaking on this property, another 25 to 50k investment. But yeah, it's good sort of property for investment. But now 565, I won't be paying 565 now. I will be asking, would you consider 525 or 530 basically? I will take as down as I can. It is your communication, your skill, how much bargain you can do. So if you wants to buy property, I think this is already more than 10% down basically. So I believe this is the right time to buy. Kiran, you have questions.
Yeah, I was thinking, I mean, you're suggesting that diversify your portfolio and go for places like Manchester, Glasgow, and everywhere. How do you typically manage those properties? If you're living in London, would you look for local agents to manage them?
Look,
or?
there's lots of company like us.
Right.
They are nationwide. They manage property nationwide. You buy wherever, right? They will manage everything. Now, the way this is going, industry, especially real estate industry, this is typically following the same footstep as FCA. For mortgage advisor, they got to have certain parameter. Now, in this industry, this is if you have qualification, you are in this industry. Otherwise, you won't be in this industry. Going forward by 2025, if you are educated, you graduate in this industry, you will be a real estate agent. Otherwise, you won't be practicing. So they consolidating, removing the junk basically from this industry, making this industry more transparent, more robust, and more educated. So the agents, wherever you have a local agent, you of course paying a small fees to look after your property, but you making money end of the day, right? One property, I know one guy, he average every seventh property, he was selling one property to wipe off all the mortgages. So he secured seven property by selling one property, right? One property sold, all mortgages ticked off, right? And that's how he built up his portfolio of 124 properties, just 42 years old.
Yeah. I mean, instead of wiping all the mortgages, I thought, like, if you have cash, invest in more than wiping your
It is
mortgage.
good. It is good sometime,
Yeah.
right? When if you have a tenant from hell, then you sometimes feel, okay, I have to pay the mortgage, and tenant is not paying the rent.
Mm.
So if I was, I am a landlord, and I would like to keep my all properties mortgage free.
Interesting. Because, like, if I'm a buy-to-let investor, I would typically buy the properties on a limited company and use the money, spare money on investing more, and rather than paying off the mortgage. Because if you pay the mortgage, then your company is getting the rent.
Agreed, 200%. You are spot on. You are spot on. But again, it is a personal choice, personal opinion of everyone.
But typically, how are you guys running? I mean, obviously, the people who have got multiple buy-to-let or big portfolio,
Mhm.
you guys having these properties on company or on your own? Because, like, if you're on your name and if you're a high earner, then straight away you're paying 40% tax on rent.
Up to now, I would say 2020, let's say, lots of landlord, they were buying property on individual name, right?
Yeah.
But since all of a sudden now it has changed. Lots of landlord, they, the big landlords, they have already planned. They were already on company structure basically. But the new landlords, if they have one property, now if they're buying second property, they're buying one company, right? So the tendency has changed. Government gonna tight the screw on that side as well, but not yet. They will say, okay, now everyone is going on company route. Let's make this more tight, because government don't want to see any landlord, right?
Yeah.
There is a question on basically government. They are not supporting landlords. Yes, Jayanti, please go ahead. You're on mute. Jayanti, you are on mute. Jayanti, you are on mute. You have to unmute. You can type.
Yeah, sorry, it took me time to unmute.
Fine.
Yeah, so yeah, just a traditional buy-to-let investor, very small, anticipating very high interest rate and my return on investment just getting wiped out. So you suggested HMOs as an alternative form of investment. I was wondering what are the interest rates on short-term lending looking like? Are they going as crazy as the traditional buy-to-let interest rates? Are they any different? Or even converting it to a second home, allowing my children to live there. I mean, I'm just trying to sort of ride out this high interest rate, because I think the return of investment is going to just hit the floor for me.
I think Gaurav can answer better than me.
Hi there. Sorry. Hi, Janti.
Hi.
So buy-to-let average rate is probably between, I'd say, about 6.5 at the moment. And short-term lending, when you say short-term, do you mean like for a 2-year fix? Is that what you mean? Or?
No. By short term, I mean that, when I was once looking to buy in Edinburgh and a lot of traditional buy-to-let lenders didn't allow me to lend it out on Airbnb for short-term lending.
Sure. Sorry, short-term
So
let. Okay.
holiday let kind of thing.
Yeah. Sure.
So I'm just wondering whether that would give better results, but it would mean changing the nature of the mortgage, wouldn't it?
Yes, correct. That is right. So, I mean, rate-wise, there's not much in it, to be honest with you.
Uh-huh.
There's not even 0.5%. But the
Okay.
upside, if the properties, I'm sure you know this better, but if the property is in the right location, it's in the right condition, then it may be worth you paying that 0.5% extra on the interest rate. But yes, we would have to kind of switch that over to a short-term stay sort of mortgage where you can use it so that you can let it out on an Airbnb sort of basis. Or to serve as accommodation, yes, you can do that. But there's not much in it. It's not even 0.5% now. It's just the fees are a little bit hefty, as you know. That's kind of about 5% of the loan amount on average. But the upside is it's not just the interest rate, but also you can offset. I don't know if your property is in your personal name or limited company, but then your personal name you can actually offset the interest cost because then it becomes a business and not just an investment. So that could be also, it might be worth you speaking to your accountant to get some tax advice around that.
Okay, so yeah, it is in our personal name because we have some tax benefits. I mean, yeah, because my husband is on a different tax structure. So what you're saying is that you can, if it's on your personal name and you convert it to a short let, you can you can offset the mortgage interest, is it?
That's my understanding of it, but again, I don't want to give you tax advice. I've got to be careful.
No, I understand that, yeah.
But yes, you can. That's what I've been told. So it'd be best to check with your accountant. But because it becomes it's a trading business then, right? It's not just an investment. So that's why I think that's the differential between the two.
Okay. Yeah. Okay, that's useful to know. And what about second home? Like, are they quite difficult? Because one of the things is to just pass it on to my child at this moment who can't afford the rent, so her own rent. So that the way to do it would be to convert into a second home.
Yes. Yeah, I mean that's definitely a possibility. The only thing with that is it's if it's just your income or your husband's income, then we have to stress test if you have a mortgage in your home or even the bills. We take that into account, but also the expenses for the second home as well and all the bills. So that's when. But we can, if you need to discuss that, you've got our details. More than happy to talk offline, right? With that, no problem.
Okay,
that's an option. Yeah.
Thank you.
No worries.
Hey Gaurav, I have a question. If you have, you have organically grown out of your previous homes to bigger homes, and all of you ended up having all houses on your names, and obviously because of the tax implications, if you want to convert your properties onto a company name, you have to pay stamp duty because you are essentially selling your home to your company. Is it worth taking a hit and converting them, or do you think you end up spending too much and you're not going to gain anything? Because
that's a question I get asked every day. I'll be honest with you, but we can't give you if you should do it or not. But what our clients are doing is they are speaking to tax specialists who basically. Who can actually write to HMRC up front before you make any of these changes. So obviously, if you were to do it direct, let's say if you did it, then yes, you're right. Capital gains tax, then you've got stamp duty to pay again, all the costs for the mortgage, the solicitors. It can be quite expensive, depending on how many properties you have. And if there are ways where other clients, when they've got more than a certain amount of properties, they've basically gone down the route of going through via an LLP and then a limited company. But again, that's something you need specialist advice. It's normally not just an accountant. You need someone who's a tax specialist who could kind of give you that advice and kind of see, do you qualify for that? And they'll check that with the HMRC before you do it, so you're not liable for all those things to pay later.
Is there a point of contact that you can share?
I can, yes, I can. I have a couple actually. What I'll do is, can I do it offline?
Yes, please. Yeah.
Is that all right? I can do that. No problem. I'll get your details of each, and I will do that.
Yeah. Can you also contact me on that, Gaurav?
Yes. Okay, got me. No worries at all. I've got my details on the screen. I can maybe drop you guys a line. Yeah. So it's Kieran and Govin. No worries. I'll do that.
There is a Gaurav LinkedIn shared by Pooja, so you can connect him on LinkedIn as well.
Yeah, that'd be perfect.
So, so it will make life more easy.
Okay.
But again, easy to just search Landmark Private Finance. You will see Gaurav there. Any other question, guys?
Guys, one last question.
if
Yeah,
no-
maybe can you organize a session for the techs
Yeah.
Yes,
where we
that will
can
be
discuss the
Python
tech stuff?
actually.
Yes, the next session is in end of September. I'll confirm you the dates. Govind, I have your details, so I'll confirm
Yeah.
you the dates.
Okay.
So it's not definitely we will share the recording.
Yes, that would be great. Yeah, thank you.
Perfect. Okay, guys, thank you very much. I appreciate your time. Stay safe. Enjoy your weekend.
Please feel free to drop me your emails or phone numbers for me to share the recordings with you.
Sure.
Thank you all.
Thank you.
Thank you. Thank you.
Okay.
Thanks,
Thank
Vijay.
you. Bye.
Thank you all. Thanks, Vij. Thanks, Pooja. Bye-bye.
Yes,
Bye-bye.
bye.